Hello, I'm Jessica Ryan Keeney. I am the Lassen County and Plumas County Department of Child Support Services attorney. I've been practicing family law since December of 2009. I was the city attorney for a small Northern California city for about 5 years, and I've been the child support attorney for Lassen County for going on 10 years, minus a 1 year break that I took off. Anyway, today's video is not legal advice. It's also not tax advice, and it's probably going to be the most boring video that I've ever done. And all I can say is I'm really sorry. I don't have a way to make this more interesting. It is what it is. So today we're going to talk about the tax settings in CSE, in the CSE child support calculator, or the same tax settings apply to the statewide guideline calculator for California. Oh yeah, this video is for California only. So there are various tax settings for state and federal taxes in the guideline calculator. And when I say the CSE calculator, I also mean the free one on the DCSS website, and I'll have a link to that. So yeah, there are various tax settings. We don't frequently change them, but there are definitely situations where you need to change them. And I used to have a commissioner or appear before a commissioner who would frequently change them. And sometimes she would ask me about what the requirements were for certain tax settings. And I didn't necessarily have a good answer because I hadn't done this video before. And eventually the write-up for this will be on my website, and the link to that will be in the description below as well. That way you have a little take along that you can use when you're doing a guideline calculation in either CSE, if you're a DCSS employee, or on the free side of the DCSS state website when you're using their state calculator. Okay, enough of that. Let's get through this. So number of children for child care credit. Oh yeah, and I'm just going to take this from the top of the tax settings to the bottom. This is a box that you enter the number of credits into, and the calculation defaults to 0 credits for the non-custodial parent and the same number of credits for the custodial parent as there are children subject to this calculation. This section includes children from other relationships, and if credits are entered here and there's no amount entered in the child care expenses section, then the calculator will not apply this credit. So this applies, or you need to be aware of this section if you have children in your home other than the children who are subject to this calculation, or if you're doing a calculation and there are children in a home other than the children subject to this calculation, that's when you're going to make adjustments to this section. To qualify for this credit, the following apply, and this is by and large from the irs.gov website. The participant must have earned income for the year, and there's another section where we'll discuss earned income. Child care was provided and paid for so the participant could work or seek work. The child care provider can't be someone the participant can claim as a dependent on their taxes, must identify the child care provider on the tax return, and per NerdWallet, the child care provider can also be a preschool, so that's pretty cool. The child or children subject to this credit must be under the age of 13. Children must have lived with the participant for more than half the year, and the child or children must have a taxpayer identification number, so this is usually a social security number. Next up, we have number of children for earned income credit. So here we enter the number of children who qualify for this credit into the box. The default is 0 for the non-custodial parent, which you'll see abbreviated as NCP sometimes, and for the CP, that's the abbreviation we use, or the custodial parent, defaults to the number of children subject to this calculation. And the calculator should calculate the proper credit based on the participant's income, meaning if the participant makes more than the allowed income, the calculator should automatically not give the credit. And I think that this is a phase out credit, but I don't remember. If it is, the calculator should also phase out the credit appropriately. Okay, so to qualify for this, the participant must meet the following requirements. The child can be the biological child, adopted child, stepchild, foster child, or grandchild of the participant. The child also can be the sibling, half-sibling, step-sibling, or any of their children. So nieces or nephews, or half nieces or nephews, or step nieces or nephews. The child has to be under the age of 19 at the end of the year. Child must be younger than the participant or the participant's spouse if filing jointly. Child must be under 24 if the child is a full-time student. And there's no age limit for a child who's permanently and totally disabled. The child must have lived with the participant in the United States for more than half the year. The participant must have worked and earned income under $59,187, and that figure may change from year to year, but since the calculator is automatically going to apply or unapply the credit if appropriate, we don't necessarily have to worry about what the income level is of the participant, but that's one of the requirements anyway. The participant must have investment income below $10,300 in tax year 2022. The participant must have a valid social security number. Participant must be a citizen or a resident alien all year. And the participant must not file Form 2555 foreign earned income. By and large, the federal information that I'm getting is from irs.gov. And the state information that I'm going to discuss is going to be from the FTB website, Franchise Tax Board. And then some of the information will be from the DCSS handbook or procedures manual, which the public doesn't have access to, I don't believe. Okay, next up, number of children for child tax credit. Enter the number of children qualifying for this credit into the box. The calculator defaults to, you'll never guess, 0 for the non-custodial parent, and for the custodial parent, it defaults to the number of children subject to this calculation. The calculator should calculate the proper credit based on the income of the participant getting the credit. So to qualify, the child or children must be under 17 at the end of the year. Child or children must have valid social security numbers, valid for employment in the United States. Child or children must be related to participant as follows: either the child, stepchild, eligible foster child, brother, sister, stepbrother, stepsister, half-brother, half-sister, or a descendant of one of these. For example, a grandchild, a niece, or a nephew. And by the way, if I say child, I also mean children if there's more than one child. Child must not have provided more than half of their own financial support for the year. Child must live with participant for more than half the year. Child must be properly claimed as participant's dependent on the participant's tax return. Child must not be filing a joint return with their spouse or filing the joint return to claim or if they are filing a joint return with their spouse, they're only filing it to claim a refund of withheld income tax or estimated tax paid. Next one, family tax credit, also known as credit for other dependents. Enter the number of dependents into this box. The calculator defaults to 0 for non-custodial parent and 0 for the custodial parent. And the calculator should calculate the correct credit based on the income of the participant getting the credit. So check this one out if there are dependents in the household that aren't children. This is going to be your tip-off. So to qualify, the dependent can be of any age. The dependent must have a social security number or tax identification number. TIN stands for tax identification number. You may see that in the write-up. The participant must claim the person as a dependent on their taxes and cannot have claimed the dependent in the child tax credit or additional child tax credit section. Next up, self-employment taxes. This is a checkbox. It's checked by default, and if no self-employment income is inserted in the calculation and this box is checked, the calculator will calculate no self-employment taxes. So we don't necessarily have to worry about that box because the program's going to default to a useful setting for us, but there it is. It exists, and we discussed it briefly. So FICA, Social Security, and or Medicare. So this is also a checkbox, and it's checked by default. If a participant doesn't pay FICA, which is the combination of Social Security and Medicare, then uncheck this box. And there are actually people who don't pay FICA, and we actually see a decent number of them in our counties. And I want to say they tend to be correctional officers, but don't quote me on that. Always look at the pay stub to see if there's FICA. And you may see, instead of it saying FICA, you may see it say Social Security in one line and Medicare in another line. And that's also a tip off that they pay FICA. So the next box is Medicare. And this is a check box, and it's checked by default. And if the participant doesn't pay into Medicare, then uncheck this box. And being that I'm not a tax expert, I don't know why the calculator has a separate section for Medicare when Medicare is also captured in FICA, except maybe there's a situation where a party doesn't pay Social Security, so they don't pay into FICA, but they are paying Medicare. I don't know. Just look at your pay stubs, and if you see Social Security and Medicare on lines, then you know they're paying FICA. And if you see FICA on a line, then you know they're paying FICA. If you don't see FICA or Social Security, then you're not checking the FICA box. But if you see Medicare, then you're going to keep the Medicare box checked. And if you don't see FICA or Medicare, then you're going to uncheck the Medicare box. I hope that was clear. Anyway, who doesn't pay FICA, aka Medicare and Social Security? So the following information came from the article Who is Exempt from Social Security Taxes by Sarah Fisher, September 9th, 2022, and it was from smartasset.com, and I'll have a link in my write-up if you want to go read it. So basically, there are 5 groups that generally don't pay FICA, and there are certain religious groups, students and young workers, employees of foreign governments, non-resident aliens, government employees, that would be those correctional officers, and high-income earners. So the bottom line is, for all of this, look at the pay stub to see if there's FICA, Social Security, and or Medicare being withheld from the participant's paycheck. So let's discuss certain religious groups. Again, this is from that same article. Examples of religious groups that don't pay FICA are Mennonites and Amish, and to be exempt, it must be a recognized religious group that is opposed to getting retirement and health care under a private plan. The group must have an established record going back to 1950 of giving members reasonable provisions of food, shelter, and Medicare. Under the students and young workers category, to be exempt, the person must be a student working at their university, and only the money earned from their university is exempt, or a medical resident, or a child under 18 working for his or her parents in a family-owned business, or a person under 21 working a domestic service job such as housekeeping, babysitting, and gardening. Next category exempt is employees of foreign governments. So to be exempt, an employee of a foreign government, the participant must be an employee of a foreign government as long as the work includes doing official business on the foreign government's behalf. Non-resident aliens, to be exempt, participant must be a foreign worker on a temporary visa, such as a professional educator, scholar, or certain international students choosing to work while in the U.S. Government employees, to be exempt, they must be a government worker paying into a government pension that is comparable to Social Security, or must be a federal worker who has been serving consistently since before 1984 and is covered by another retirement plan. And then somewhere in the mix of this, the year 1986 comes into play, but that wasn't part of this article. It was just something that I saw elsewhere. So examples of government employees who don't pay into FICA are teachers, Congress people who have served consistently since before 1984, and we have a bunch of them, some prison employees, retirees receiving CalPERS pensions, some law enforcement, some firefighters. So you can't just think, well, this participant is a correctional officer or a law enforcement officer or a firefighter or a teacher, therefore they don't pay FICA. You actually have to look at the pay stub and see for yourself if they're paying FICA, Social Security, or Medicare, and then uncheck the appropriate boxes. And then high income earners. So high income earners do actually pay FICA, but only on money they earn up to a certain amount. As of 2002, that amount was $162,000 per year. And then anything earned after that is exempt from Social Security tax. So the calculator will automatically phase out the Social Security tax if you enter an income above the threshold. So you don't have to worry about thinking, oh my gosh, my participant makes $182,000 a year. I need to do something about checking or unchecking the FICA box. No, don't worry about that. The calculator will take care of it for yourself or for you. Okay, retirement savers credit. This is the next box. So this is a check box, and it's checked by default. If no qualifying retirement contributions are inserted in the calculation, the calculator will calculate no retirement savers credit. So you don't necessarily have to worry about whether or not this box is checked or unchecked, because it's going to be checked by default, and the program is going to calculate it if there's qualifying retirement entered into the calculation. So be sure that you always enter the retirements in the proper spots in the calculation so that the calculator can calculate this properly. Anyway, in case you're curious, you're eligible for this credit, or your participant is, if they are 18 or older, not claimed as a dependent on another person's tax return, and not a full-time student. Okay, next one is if married filing separately, lived with spouse part of the year. This is a checkbox. It is checked by default. If the married filing separately with other parent section is not chosen, then having this checked will not affect the calculation. However, if the party's tax setting is married filing separately with the other spouse, pay attention to if this box should be checked or not, because they could be filing separately with the other spouse, but maybe they didn't live together for part of the year, and then the box should be unchecked. Parent is blind. So the calculator doesn't check this box by default, but if it applies, go ahead and check it. Parent is 65 or older. Again, the calculator doesn't check this by default. So by default, it's not checked. Go ahead and check it if it applies. That's why that space on the first page of the income and expense declaration stating the age of the party is important, because it'll tell us if we need to be checking that box or not. Next category is new spouse is blind. Again, the calculator automatically has this box unchecked. Check this if it applies. New spouse is 65 or older. Again, the calculator does not check this by default. So if it applies, be sure to check it. And this information, the age of the new spouse, should be found on page 3 of the income and expense declaration at the top with the people living in the household. There may be situations where maybe spouses aren't living together, but it should be checked. I'm not a tax expert, I'm just thinking. And always be sure to put the age of the parties in that section on page 3 of your income and expense declaration. That way we have this information and we can see if it applies. Next section, deduction type when parent 1 and parent 2 are married to each other and filing separately. Itemized deductions or standard deductions. So the calculator checks itemized deductions by default. Uncheck the box if it's not applicable. A lot of counties require people to exchange their tax returns before court or provide a tax return to the department, and so you would find this information on the tax return. Okay, other state tax settings. So this is California tax settings now. So the first one is California tax exemption, registered domestic partner only. This is a box that you insert the number of exemptions into, and the calculator defaults to one exemption for the non-custodial parent and one plus the number of children subject to this calculation for the custodial parent. And the DCSS procedure manual says to only change the number in this field if the parent is a registered domestic partner. It also says that when same as federal is chosen in the tax filing status drop-down box, then the federal filing status will be used, and I take that to mean that the federal exemptions will be used too. So the bottom line is, don't change anything in this box unless you're dealing with registered domestic partners and you do not select same as federal in the tax filing status drop-down box. If you're dealing with registered domestic partners, this is where you enter the number of California tax exemptions claimed, and this is because there may be a different number of exemptions claimed here for California than are claimed federally. Children for California Child Care Credit. This may sound a lot like the federal credit, but it is a different section. So this is a box where you enter the number of children who qualify for this credit. This includes children from other relationships. If there are no child care costs entered into the calculation, then the calculator will not apply the credit. The calculator defaults to 0 for the non-custodial party and the number of children subject to this calculation for the custodial party. So a child qualifies if the child meets any of the following. The relationship to the participant is son or daughter, stepchild, adopted child, foster child, brother, sister, half-brother, sister, step-brother, sister, niece, nephew, or descendant of one of the above. The child is under 13 years old. The child lived with the participant for more than half the year. The child did not provide more than half of his or her own support. The child did not file a joint federal or state income tax return with someone. The child is a U.S. citizen, national, or resident of Canada or Mexico. To qualify, the participant must meet the following qualifications. File a joint return if married. Child care must have been provided in California. Child care must have been so participant could work or look for work. Participant must have earned income. The person that provided the child care cannot be the spouse or registered domestic partner of the participant or the parent of the child. Participant lived in the same house with the qualifying person for more than half the year. Participant's federal adjusted gross income is $100,000 or less. Participant's other child can be the child care provider if the other child is 19 years or older. So this is another one where I believe that the calculator will automatically apply or not apply the calculation if the parent makes, depending on the income the parent makes. So if all of the other qualifications are met and you check the box, but the parent makes too much income to get this credit, then the calculator will not calculate the credit, is what I believe. The main things that we worry about when I see us adjust, or I should say when I see the court adjust this setting, is the relationship of the child to the participant, the age of the child, and whether or not the child lived with the participant for more than half the year. Next category, California state income taxes. This is a checkbox. The calculator defaults to checking this box. If the participant doesn't work or live in California, they will not pay California income taxes. Also, some federal employees don't pay California state income taxes, so be aware of that. Be sure that you're looking at the pay stub. If you choose the selection to use another state tax rate or tax amount, leaving this box checked has no effect on the calculation. And generally, the participant must file an income tax return in California if the participant was a resident, part of the year resident, or non-resident, and is required to file a federal tax return, received income from a source in California, has income above a certain amount. Next up is California State Disability Insurance. This again is a checkbox. The calculator defaults to having this box checked. If the participant doesn't live or work in California, then this box will not be checked. Also, some federal employees don't pay California State Disability Insurance, so be aware of that. This deduction is usually seen on a pay stub as SDI or CASDI, so be looking at the pay stubs to see if California State Disability Insurance is being paid. And obviously look at the pay stub regardless of what line of work the employer or the employee is in to see if it's actually being paid. Okay, California Dependency Credit for Dependent Parents. And this is in the next category. It's also a checkbox. The calculator defaults to this box being unchecked. To qualify, and this is per IRS Gov topic number 602, participant may be caring for an elderly parent, even if that elderly parent does not live with the participant. Participant's qualifying child who was under the age of 13 when the care was provided will be claimed in the California Child Care Credit discussion above. So there may be, you might be thinking, well, child should be included in here. No, the child will be included in the California Child Care Credit discussed above. This is for non-children. Participant's spouse is physically or mentally incapable of self-care and lived with participant for more than half of the year. I said this is for non-children. May actually apply to children over the age of 13 if they're still dependents. Anyway, it also applies to the participant's spouse if they're physically or mentally incapable of self-care and lived with participant for more than half the year, or an individual who is physically or mentally incapable of self-care, lived with participant for more than half the year, and either of the following apply. Was participants dependent or could have been participants dependent except that he or she received gross income of $4,400 or more or filed a joint return, or participant spouse, if filing jointly, could have been claimed as a dependent on another taxpayer's tax return. So this section here, that does make it so that if it's a child that's 13 or older that is dependent, they can be claimed in this section, but they have to be physically or mentally incapable of self-care. Next up, California Joint Custody Head of Household Credit. This is also a check box. The calculator defaults to this box being unchecked. To qualify, and this is per the ftb.ca.gov website, there has to be a custody agreement. The participant has joint custody of either a child, a stepchild, or a grandchild. Participant paid for more than half of the child's expenses. Participant's home must have been the child's main home for at least 146 days, but not more than 219 days out of the year. And it looks like participant's tax filing status must have been single, because it says that participant cannot have filed taxes as follows: either married, registered domestic partner filing jointly, head of household, or qualifying widower. So this is for those situations where a parent isn't the custodial parent, but they do have a certain amount of days of custody, so over 146, but under 219. And they've paid for more than half of the child's needs for the year or expenses for the year. I don't see this one very frequently, but it does exist. Okay, next up, California Renter's Credit. So this is a checkbox, and the calculator defaults to this box being checked. Uncheck the box if the participant doesn't qualify for the California Renter's Credit. If this box is checked, then the calculator will calculate the credit based on the income of the participant and their tax filing status. If mortgage interest is entered into the mortgage interest field, then this box will uncheck automatically. But if the participant qualifies for renter's credit and mortgage interest deduction, then enter the mortgage interest first, then recheck this box. And that last suggestion was from the DCSS Procedures Manual. So to qualify, and again, this is per the FTB, the participant must have paid rent in California for at least half the year. The property must not have been tax exempt. Participant's California income was $49,220 or less if filing status is single or married registered domestic partner filing separately, or $98,440 or less if you're married registered or registered domestic partner filing jointly, head of household, or qualified widow or widower. Participant did not live with someone who could claim the participant as a dependent, and the participant or the participant's spouse or registered partner were not given a property tax exemption during the tax year. California Earned Income Tax Credit. So this again is a checkbox. The calculator checks this box by default. The calculator will automatically calculate this credit if it's appropriate or applicable to the participant. Next up, California Young Child Tax Credit dependent under age 6 or under 6. This is a checkbox. The calculator defaults to this box being unchecked. So the DCSS Procedures Manual says to check this box if the following apply to the participant. The child was under the age of 6 at the end of the tax year. The child was claimed for the federal earned income tax credit. Participant has earned income of less than $30,000 a year, although the IRS.gov website says income must not be more than $32,490 per year. However, I do believe this is another one of those categories where if you check the box and the participant makes over the required amount, over the threshold amount of money, then the calculator will automatically not apply the credit. Okay, per IRS.gov, the participant must not have had net losses of more than $32,490 for the year. Participant must have a valid Social Security number. Qualifying children must have a valid Social Security number. The participant must not have used the married domestic partner filing separate status. And they must have lived in California for more than half the year. And what's a net loss? It is when the income of the participant when the losses of the participant exceed their income for the year. And it could apply to gig workers and other self-employed people, as well as those with investment, rental, or other losses. Woohoo! We made it through it. That was boring. Sorry, I don't know what to say other than sorry. I don't know how I could have made that more interesting. It's tax stuff and calculation stuff, and man, you just can't get much more boring than that. So thank you for sticking with us. Please go ahead, like the video, subscribe, ding the bell so that you get notifications when we upload future content. If you have any questions or comments, you can put them in the comments below. We may not answer them, and if we do, it won't be legal advice, but a lot of times we get good video topics from those comments below. And remember, today's video was not legal advice. It also wasn't tax advice. So if you have any questions about what boxes apply and what credits apply in your calculation, you should seek the advice of a tax expert. And if you're a DCSS employee, well, it still wouldn't be a bad idea to seek the advice of a tax expert, but chances are decent you don't have a tax expert at your disposal. So talk to your attorney, talk to your other staff members and your leadership team, and read the DCSS Procedures Manual, and hopefully you'll be able to sort out what tax settings you should be applying to your calculation. And yeah, thanks for staying tuned. We'll see you in the next video.